what are the reasons for a question was asked at Mastermind about where's your exit point? And when I thought about it, I really didn't have an exit plan. The question was, where's your exit? And um, it's a good thing that was asked, but I wasn't sure. So I basically responded saying, well, uh, it felt like that's the exit. And what that means is that I'm not sure where my exit is in my trade. So so that's why I keep losing a lot of money. So one way of exiting is when when the when the stock has moved to a certain amount that causes me to become emotionally distraught. When it's emotionally distraught, then I sell and I lose a serious amount of money. That's one way of getting out of it, out of the stock. But when I'm making money, I look to see if I either exit for a couple of things. There isn't too many options for me, so I need to think further about what I need to do to figure out how what I need to do exit the trade. And one of them is I exit the trade when I feel like there is a substantial amount of money that I've accumulated, and when there seems to be uh, it's possible that there is a parabolic move, and then I just exit after a certain amount of gain, and then I wait and look for the time to flow before I exit later on, right? So that's a couple of way for me to exit the trade, and um, so that is essentially what that is essentially telling me is that I am not certain how to exit the trade, which means that my initial work to uh, get a trading plan prepared before the entry occurs is missing, because I should have thought about that already. I should have thought about the game plan before the game, like football, figuring out what opponents there are, trying to figure out how to maneuver, like in sports, like boxing, when a potential match is presented, which individuals have certain characteristics. If I'm shorter than the other person and the person is taller, then what kind of method should I use to proceed? If I'm the bigger person, then what I want to do is I want to get close, lean on, in order to tire the shorter person out, or stay far so that my long arms could uh, could reach out and close the distance. But for a short person with short arms, it's difficult to do unless the person gets close. So there's a game plan that I need to figure out. So the question is legitimate, and what would be the optimal? If I'm thinking this way, what is the so if let's say I'm on the winning side now, what would be the optimal way of exiting when I'm actually in the money? So let's say that, okay, so let's use the options terminology, which is in the money or out of the money. It has different meanings, but in this case, we'll call it that. So in the money means that I made a trade and the stock is moving in my direction, or green. So the trade that I made is green. So when do I get out? When do I get out? So I have to figure. If I were to figure out, usually what will happen is the stock will move up, down, move up or down, and then it'll reverse, or it'll keep going up in a parabolic mode. So what would be so ideally speaking, I would want to exit at the high of the day if I'm bullish and I've gotten in. Okay? So without adding, so how do I manage my trade? So once the trade is entered, I get into a stage called trade management. That's what it is. That's what I'm doing. I'm actually managing my trade. That is that is the that's the thing that I need to be aware of. Trade management. Once I made the trade, I have to manage my trade. And what happens? So what happens to that when a trade is managed? What happens? So that's essentially what's happening. When it's green, it's initially I'm just gonna be blunt as possible. Initially, when I'm making these videos and I'm new and I have not done this before, that I'm just gonna stumble through. But I'm gonna keep talking about it, and I'm gonna keep building on it, and that's the way to grow. And if it takes me years, that's the way it's going to be. But it's gonna be done. That's the future. So right now, what I'm talking about is I'm just stumbling through this. It's called trade management. Trade management. Trade management is very exciting. Trade management. Trade management, basically a process of managing the trade in such a way that it makes the most of the profit and lessens the risk of supplies. That's interesting. So how do I Trade management is a very, very interesting thing. Trade management. So how do I make the trade? So trade management. So there seems to be three different ways of making a trade. One of them is entry. And then while I'm in the entry, then I'm actively managing my trade. And then the end, there's two sections. There's pre-trade and then there's after the trade. After the trade ends with the trade ending, being exited. So there's two parts of a trade. One of them is figuring out. Wow. So there's interest. This is something that wow. This is probably what people pay several $1,000s to acquire. The first part is which stock to buy. That's the difficult part, because the first part is trying to figure out what the macroeconomic conditions are, which stock to trade, and where the entry point is, and what the size of the trade is. That's just scratching the surface. And then after I get into the trade, then I have to figure out, okay, so on what conditions will I be out? What on for profit, and what condition would there be if the trade goes against me? So it's called a trade management. Trade management. So trade management, wow. Trade management. This tells me how ill prepared I am to make trades, because right now I have several things going on in my personal life that's causing me to. Wow. And wow. Right now, my cell phone, I'm not sure what happened to it, but my cell phone, one of the edges were chipped for some reason. I didn't drop it. It just chipped. I'm not sure what. So and then I'm trying to figure out at this stage where I'm going to live. That's because I have to, just like an exit plan, I have to figure out where I'm going to reside. So this is I'm not sure what to do at this point. Trading is has taken a backseat to what my current situation is. I need to create a stability in my life in order to for me to focus on what I need to do. And right now, because I'm in a housing transition where the where I need to go is uncertain, this is causing me to be um, causing me to be just uh, unable to focus on what I need to do. I suppose I could just rely on God to just carry things over because I know that it's I know that the end results will be good and it's in a positive direction. So essentially, there's a couple of things that I'm missing in my trading. One of them is, what are the requirements for me to enter a trade? Second part is, how do I manage trade when I enter the trade? Part of the management of trade is setting where the exit point is and exiting. So there's two parts to that. Trade management, which before the trade occurs. So um, that's essentially what it is. And then second part is, how do I exit once I see, this is something that's mind-bogglingly simple, that I should have thought about this uh, before a first trade is made. However, the ease and the thing is, trading can be done by anybody. Um, Whether I know anything about the market, or all I have to know is how to make a purchase, how to open up account, and what instruments I can do and what limitations there are. These are things that I can acquire. But becoming more sophisticated in trading requires knowledge of entry and exit. And entry exit is, in other words, is entry is trying to figure out where the entry point is, and it's vastly complex because I'm doing a couple of things, which is one, to determine which direction the stock is going to go, and then where I enter, okay, and which stock to trade, and what the reasons are. What are the biggest reasons that are impacting the trade? The second part is, after I enter, after I make that trade, then it's also not an easy thing. The predictor is that when I enter, trade management becomes easier, I suppose, because it tells me that I've pre-planned and the direction that I've chosen has a high probability of making it. However, for some reason, if the trade does not go in the direction that I've theorized, then I have to figure out where my exit is. Where do I exit? So these are things that should have been thought about, um, and unfortunately, no matter times I have, how many times I have. How many times I have lost a significant amount. I was undeterred, and I kept doing the same thing and expecting results. That's called a foolish behavior. Now I'm revisiting and attempting to unravel what is going on currently. So I seriously need to fine tune my entry and my exit. I need to figure those things out. Entry is very complex because if in order for me to enter, I have to if in order for me to figure out where the entry point is, I have to figure out that how do you know where the entry point is? And because there are several factors. One of them is the support and resistance. Okay, the stock price may be somewhere right between, and getting in at the middle of it is creating a certain amount of uncertainty. It creates a certain amount of uncertainty where it's difficult to predict whether the direction that the stock is moving is a genuine trend or not. Let's say the stock is moving up and it's moving towards resistance. then I may have to wait before the stock does anything. Because if I enter and then make uh, maybe a small percentage gain and then the stock reverses, then I could be the trade would immediately turn red. So I have to figure this out. The second part is so when I enter, what are the so I would have to enter based on support. It's basically on a funnel level. Trading, I need to figure out what that is. Basically, trading is basically based on support and resistance. Uh, its entry point is based on support and resistance, and exit is based on support and resistance as well. It's interesting that I'm attempting to understand why is that the case. If the stock is on a trend, that means that the point where I enter is the support, because it'll just keep trending up. Okay, but if the stock is fluctuating quite a bit and it's whipsawing, then there's support and resistance, and based on where the stock is, then I can figure out exactly where the entry point is based on its support and resistance. And selling is the same thing. So essentially, when a stock keeps going up, there's no resistance, right? There's no resistance. So it keeps going up, but there is support because it keeps going up. So on a interesting, so it's essentially everything is based on support and resistance. Everything is based on support and resistance, and where those support and resistance are based on whatever the time period that is. So what I need to do, so what I even my trades, my dip and rip trade is based on support and resistance, because what I'm in a lot of the cases, in cases where I lose a lot of money is in cases where it's extremely green, or actually it's green and then it reverses. Okay, so the reason why it reverses when I get in is because it must have hit the resistance level and it has moved in the other direction, where I have bought right below the resistance, and that causes me to suffer a heavy loss. That's how it works. So essentially speaking, there are the lines of resistance and support is not a flat horizontal line either. And the support is not a flat horizontal supply, because there are stocks generally tend to move in a certain pattern, and on a higher time frame it moves in a channel that it creates. So if I'm spanning out looking at a chart formation where the stock has been trending down for the past 10 days, that means that there is a channel that is whipsawing between that decline. And therefore, when I'm attempting to purchase something on a bullish move, and when the stock has reached a resistance level where it's attempting to move in the bigger time frame trend, then that's generally the case where I lose most of the money. And in many of the cases where the stock is at a point where it's hovering around a point, but either climbing in a certain direction, whereas it dipped a little bit and it's on an uptrend, then the dip and rip scenario works really well, because generally speaking, when a stock moves down and when I buy, even if the stock is up and it retraces a little bit, and when I buy the dip and it goes up, then it generally on a green day I can make like gains. So essentially, looking at the things in a perspective of support and resistance, and that's why maybe the Darvas box makes sense. The Darvas box generates a picture, a box in a certain region, and within that certain region, the stock will behave either entry at a low point and move up to a higher point, or higher point to a lower point. And that's how many of the traders are. And essentially speaking, when a trade is made, either in a bearish trend or a bullish trend, taking advantage of those two trades, it moves either in a one or second direction. Because if my thesis, essentially it's a 2 point, it's essentially a 2 point trade scheme. It's a 2 point trade. When I enter, I put money in. When I exit, I take the money out. So it's essentially a 2 point trade. Essentially, that's what it is. So how do I answer this question about how do I? So where do you exit? Where do you exit? So one of the so the most important thing is near the region of support and resistance. That's the right answer. The right answer is I exit at the region of support and resistance based on the trade that I make, either on a bull call or a bearish call. That's all it is. Yeah. Essentially, trading is basically a 2 point entry and exit. Those are the 2 points. And where those 2 points resides are in the support and resistance region. And anywhere in between is a higher level of understanding. Let's say the within those two. Wow, this can be expanded out into a higher time frame as well. This is fascinating. That's question is, yeah, that's fascinating. I can stop here right now.